So in this video, we're going to talk about Caterpillar, one of the Dow 30 stocks, and it had a decent 2024. The stock was up 24% in 2024. This is the monthly chart. You can see for December, price has pretty much been stagnant. Yes, it did go lower, and yes, it did go higher, but it's going to probably potentially close almost at break even. Almost at break even. Just want to bring your attention this monthly buy level at $286. And as you can see, price almost nipped its toes at the bottom of that top of that zone before pushing higher. We did get a high of roughly $416 before price pulled back. Nothing too concerning as price did react to this 13 simple monthly moving average. Now, going to the weekly chart, before we continue with the analysis, we're going to get into this article. It's going to discuss their most recent earnings. So Caterpillar reported fourth quarter earnings that beat estimate expectations. However, revenue fell short of estimates, sending the shares down 3.5% in early trading. The construction and mining equipment manufacturer posted earnings per share of $5.14, topping Wall Street estimates of $5.06. However, revenue came in at $16.22 billion. That was below the consensus of $16.64 billion. Sales declined 5% year over year to $16.2 billion, primarily due to lower sales volume. The company said dealer inventory decreased, though that was a good thing, by $1.3 billion during the quarter, compared to a $900 million decrease in the same period last year. And I'm going to say this hit was due to, China, where they get a nice chunk of their sales for the entire company. Nevertheless, the CEO said he's proud of the global team's strong performance in 2024 as they delivered record adjusted profits per share and strong MEAT free cash flow. Now, getting back to the chart. Let's just zoom into the daily because I want to show you how this daily bias level did work out once. And here was the setup. A rally, two basing candles, and a gap higher. That's a extended range green candle. If you just visualize what I am discussing, it would look something like this. Price basis pulls back, dips its toes about 50%, more than 50% in the zone before reacting and moving higher and setting a new all-time high. Now, why did price break through? Well, the sellers were in control. However, you could have had clues based on how far this wick penetrated the zone. Anything more than 50% penetration, that zone is subject if and when price returns. In this case, price did return, closed below. Based, you got a false breakout to the downside, false breakout because you had this 200-day moving average serving as dynamic support before price just moved higher. Now, this was the sell-off on the news. So let's take this off the chart. Let's zoom out to the weekly chart and let's see how things are shaping up. All right, now, so looking at the weekly chart, I don't really see any levels of interest. You have this gap here that needs to get filled. However, why did price stop at 350? Well, in layman's terms, that's where buyers saw price selling at a discount. So can price retest that level? Most certainly. Let's see if we can get a clearer picture on the daily chart. All right, so I don't like anything that I'm seeing. All I see really is this sideways price action. And so what's best when you're in a sideways market, you want to play the extremes. You want to short at the upper portion of the zone, and you want to go long at the bottom of the zone. Let's drill down to the 4-hour chart and what you can see, you got a drop, basing candle, and then the rally higher. So that is a 4-hour buy level, and it's supported by this support band. I want to reverse these. This should be yellow or green, and this should be red. Right? Go long, green, go short, red. All right. And here's that 4-hour buy level nested within this support level. So what do you do now? You just wait on your hands until price reaches one of the extremes, and then you take action. Thanks for watching. Subscribe. Please like the video.